Good morning. My name is Pascal Hamelin, President and CEO of Bonterra Resources. We're a gold advanced exploration company based in Quebec with 3 advanced projects with over 3 million ounces in resource in all categories that was released in June 2021. We also own a mill within the camp, and that mill is permitted, and it's in the permitting process currently to increase the capacity to 2,400 tons a day from 800.
Pascal, how are you, sir? I've seen you since the beginning of February.
Yeah, good. A lot of things happened since the last time we spoke.
Well, that's why I'm checking in. I've seen a few headlines, so I thought there's enough for us to talk about. We're not going to get bored, so that's the good news. Hey, well, look, first of all, you're up from 129 to 138 since we spoke. Good, just chugging along nicely. But the thing that caught my eye, obviously, you put the mineral resource out. Were you pleased with what you got?
Yeah, there was a lot of work done in the last 2 years. We drilled over 130,000 meters since the last resource. We hired 2 consulting firms to do the resource estimate this winter. We applied the new guidelines from November 2019 that were not in place when we did the last resource. So we did stope constraint resource and 130,000 meter drilling, 2 consulting firms. So this resource that we just released is pretty solid. And even with all this restriction on the resource modeling, we still managed to increase the ounces by close to 1 million.
Okay, so not bad, not bad. So you tick the first thing you told me you were going to do last time, which is get the resource out. You've done it. The next thing you were going to be telling me you're going to be working on for this year would be the PEA. So what is the timing on that?
That's right. The PEA started before we released the resource. We're staying with SLR. We're really satisfied with the professional people that they have. So SLR is doing the PEA this summer. The resource model were ended over to the mine engineers last week. So they're on the mine design right now. Q4 is the expected date for the PEA to be out.
Okay, and that also suggests you know what you're going to be doing with the mill. I think it was sort of 800 ton a day type capacity, but where are you with that?
Yeah, the mill is currently permitted for 800 and to process material from the Bachelor mine. So the permitting that we requested a few years back is to process material from various sites at 2,400 tons a day. We answered all the questions, the environmental impact study submitted. The last series of questions were received this winter. We answered them in March. So we're currently waiting for either additional questions or the permit. Right.
You don't know which. Well, because I think you're getting a bit of stick in the market about not being clear about the timing on that one, but it's not in your hands.
Well, that's why I talk to people like you, Matt, so people can understand where we're at with the permitting and the PEA. We're also drilling. We drill an average of 10,000 meters per month between the 3 projects. This winter there was a little bit of drilling that was pure greenfield because we're in the last year of an option agreement with Cisco Mining. So we had to commit some investment on exploration on the Duke property. The Duke property is between Windfall and Gladiator. So we were using the Gladiator core shack and the Gladiator camp to lodge the workers. So this winter, there was a little bit less drilling done at Gladiator because of that. A lot of the energy was put on Duke because we already invested over $4 million. You're not going to stop after investing $4 million on a property.
No, for sure. Let me come to that. I've got loads of questions on that. I just want to finish on the mill bit. Okay, so obviously you've submitted your answers back. Good. What do you have any sense of the economics around the mill in terms of how much more money you're going to need to spend on that? over whatever time frame that you've done the analysis on, and indeed, is it going to be as productive as you think? Is 800 ton per day a minimum, given where it has produced in the past?
The mill can start at 800 anytime. So 800 tons a day, there's no investment. Well, maybe some repairs, like less than $1 million. To upgrade to 2,400 tons a day, of course, there'll be sustaining capex on the tilling facility, because you got to keep raising dike, but it's not on year zero. There'll be maybe a small investment on year zero on the tillings, less than 10 million, but the remaining is throughout the life of mine. Now for the total tilling costs, maybe 25 million, and 10 million on upfront.
Right. Okay. Given we've not really I haven't really got a sense of the economics. If I did, I'd be kind of making up making some assumptions on this. So we say it's 10 million, it's 25 million in total. What is that? What are the assumptions that you've got or you're working with? I know you haven't done the PA, but what are the assumptions you're working on to say 25 is a good number to spend, because the tailings could generate us what?
Okay, a good 10 million tons of capacity.
Right.
So 10 million tons, 25 mil, you're looking at $2.50 a ton.
Okay. Right.
For storing the material. The tailings itself, the mill itself, the process plant, you're going to upgrade on the power line that will be included in the PEA. It's a little bit early to talk about cost, but the range between 10 and 20 maybe, but I could be off. I'm a mining engineer, I'm not an electrical engineer, and the costs are being worked on right now. But if I looked at other costs in the region, I'm in that range. The mill itself, it's an upgrade to go from 800 to 24. So you're looking at less than 100 million.
Okay. All in.
I'm saying everything.
Okay. So again, just based on what you're seeing in the region, I don't want you to be forward looking or anything, but again, just help me with some numbers. I want to make some average assumptions here where you go, okay, the tailings component, how much tailings do you have? What's the rough average grade, if just again, help me understand what could be being spat out the other side in gold or dollar terms.
Yeah. So let's say tailings and mill all together to process 10 million tons, it will cost 120 million. So you're looking at $12 a ton. $12 a ton for the capex of the mill and the tailings. You look at, let's say, the head grade hitting to the mill, diluted, you're looking at 6 gram. It's going to be about 12. So you're looking at probably $80 an ounce building everything.
Sorry, is that a net number coming out the other end? That's 6 ounces.
Yeah, well, that's on the capex.
On the capex, right?
Yeah, you got the operating costs. You're looking at, in this camp, people are narrow vein miners. They're around $200 a ton. So if you do times 5, because you're at 6 gram, so times 5, you're looking at about $1,000 an ounce. And if you include the capex, you're looking at $1,200 an ounce Canadian.
Okay.
So, and in Canadian, we're selling at $2,100. So there's a good margin. And, I'm off. Let's say I'm off by, let's say I'm way off. Well, let's say I miss $500 of cost. Well, you still have $500 of margin at the end of the day, and that $500,000, $500 times, let's say, off the 3 million ounces, you end up being able to mine 2.5. Well, 2.5 million times $500, that's a lot of profit.
It's not bad. Okay.
So
you've helped us with some numbers.
Those are all, there's a lot of forward-looking statement in this. Okay. But I think the PA is going to be looking pretty good.
Okay, so I want to be clear. Those are some numbers off the top of your head, using numbers that you've seen around you. We're not doing forward-looking on this. It's just to help people get a sense of the scale of the opportunity. Thank you very much. Okay, so obviously to that end, to get the PEA done and to continue drilling at 10,000 meters per month, you've raised a little bit of money back in. I think was it March, April?
April, yeah.
April it was, yeah. 17.5 million bucks. So how much you've got in the bank at the moment?
12, a little bit over 12.
Right.
So, of course, your next question is how much you burn a month.
Go on then. Go on.
So we invest about $2 million a month.
Okay.
So we're good. The plan is to complete the PEA and then to assess our options after the PEA is completed.
Okay, fine. Okay. So the G&A, we talk, by the way, I should point people back to the previous interview we did in February. We'll put a link below because you should see that, because we did dive into the kind of back history of this sort of troubled back history before you kind of came along as CEO and kind of jiggled things up a bit and brought a new team in. It's a completely new management team here. So do take a look at the link below, anyone watching this. So with regards to the G&A, you did say to me last time you're running a relatively tight ship. I mean, how much has the G&A gone up since we spoke, whenever it was 5 months ago?
It didn't go up. We're maintaining, the focus is on geology and at the projects. The corporate level, it's myself, the CFO, 2 or 3 accountants, and 2 accountants. So it's tight, very tight G&A. A little bit of marketing, of course, because you can have, if you have the best project and no one knows about it, what is it good for? But the key here is not to market to an extreme. It's to invest in the properties and then market it.
So, I mean, just on that, we talked a little bit about some of the legacy issues. I know you took over in December officially, but is the story getting traction again, you feel? Are people understanding there's been that big switch of management teams and approach? And I mean, I know you raised 17.5 million in April, which suggests that people are listening, but then a lot of people have been raising money in this market. It's quite frothy. So what's the response been to the story?
Well, right now, the response is pretty good. That the fact that we said we're going to do the bulk sample last year at Moroy, we did. In November, we said we're going to do 63,000 meters of drilling between November and the end of April, done. We said we're going to do the resource before the end of June, done. So people will start noticing, you know what, this management team, they're doing what they will say. They do what they said they were going to do. So I'm telling the market now we're going to do a PEA. Well, it's a safe bet to say we're going to have the PEA out before the end of the year. Anyway, I'm going to work hard to deliver.
Right.
Anyway.
Right. Okay. With the resource, I mean, how many meters was included in that? And how many has been excluded from it, more importantly?
No, it was all off the 130,000 meter. There were probably 80,000 meters that were intercepting resource, you know. So I would say a good 3/4 of our drilling hit the mineral envelope. So, and from 2019, what people have to remember, in 2019 resource estimate, there was no stope constraint. You know, there were no mining engineers involved. Now in 2021, mining engineers are involved at the resource level. So, you know, those little pocket of resource 500 meters away from any openings underground, they're excluded from resource now. All these orphan pockets. So you need good continuity, and you need minimal dilution, like minimum thickness. So especially in a narrow vein deposit, like in our case, Moroy a little bit less, but let's say Gladiator. So Gladiator, because you got a lot of very high grade vein, but at 0.5 meters, you're going to dilute it to a minimum resource estimate. So 1.2 meters. So everything that was released in June 2021 is to a minimum thickness of 1.2 meters. And then you look at grade continuity along the strike of the vein. And if it's too, choppy, they're excluded. So there's a lot of restraint applied to that resource, and we still managed to increase it by close to over 40%.
Right. So what's the average drill depth at the moment?
We're still like, for the Abitibi Greenstone, it's considered shallow. Like, we're 600 meters.
Okay.
But it starts right on surface. We had to exclude resource because we have to keep crown pillars. Moroy, the resource is under the tailings facility. So so there's a portion of the resource that is it's excluded from the resource estimate, and the same thing at Gladiator because the resource are under a lake. So we kept a 50 meter. We excluded 50 meters of resource off the resource estimate.
Right.
So it's a very conservative, to me, that resource estimate that we just released is very, very conservative.
So how do you come at that? Because obviously there's a few sort of physical constraints here to this under a lake, and you kind of got you get the regions where these sort of high grade veins and varying things. I mean, yours aren't too bad. You're obviously half a meter, but up to 8 meters, 4.4 over 8 meters, 9 grams over 3.6. So they're nice. It's not, in terms of any dilution issues, it's not it's not problematic for you. But do you know how you're going to come at this? So do you already have a picture in your head about how you're going to approach this before we get the PEA announced at the end of the year?
Yeah. In the PEA, most likely Gladiator is going to be a decline. Okay. Decline going down, and you're going to mine. Actually, we had a meeting yesterday with the mining engineers. We're looking at sub-level retreat, top down and bottom up.
Okay.
Narrow vein stope, openings 3 by 3 meters, and you mine the width of the vein. And the key is to have sub-levels interval maximum 15 meters. So that way you don't have that dilution. Like if you're trying to push too much on your development, then you end up with way too much dilution on your stopes. So very tight level development, longitudinal stopes. So it's going to be a very interesting deposit, to tell you, because one thing the GO reminded me, some of them, they've been at other mines in the camp, and where you have two set of structures like we have at Gladiator, you got the main zone and you got these north dipping zones. These intercept at other mines in the camp here, like Lamac or Sigma here in Val-d'Or. That's where you had your jewelry box on the intercept of those two structures. But try to get that with a diamond drill rig. Try to, this is on an angle like this, and you try to intercept exactly the junction, near impossible.
So it's what happens at those sort of intersections in terms of like the grade, and obviously there'll be what does that look like? I mean, are there examples in the district where that's happened, where people have found stuff?
Well, at Sigma mine, that mine was in operation from 1936 up until in the late 90s. Every time that junction, that's where you had VG. You had visible gold and like flakes, like really flakes, not disseminated gold. So that's why, Gladiator, sometimes you see capping grade applied, you're going to have, suddenly 200 grams over 0.1 meters. It's probably because they hit that intercept.
So explain to people why you do that, because we've seen this with a couple of other places, actually in Australia, where you do have to cap it because it just kind of throws the numbers out of whack. So just explain that to people.
Yeah, it's because that if you report this to be the average of the area, it's not true, because the intersection is where you got the gold flakes. but you move 5 inches away and the grade's back to normal 6 gram, you know? So, but you cannot say you got 200 grams on a 3 by 3 meter area because it's very localized. That's why you do your capping grade.
Yeah. Okay. No, I think it's important. People get very excited.
I've seen it at Sigma where suddenly, whoops, you got to call security, and you come and do hand mining.
Like I say, you've done everything you said you told me you would do at the beginning of February. Yeah. Okay, so I think that's really good. PEA Q4 good. Then it sounds like you're going to need to raise some money and make some decisions about what you're going to do next, or the speed at which you do things next, right? So what? Yeah. And again, in your head, how are you playing it?
Well, you don't go in production from a PEA. So you're going to do infill drilling. You're going to increase the confidence of your resource. So after the PEA, we're going to embark on infill drilling in 2022. It's important to mention to our investors, the auditors, that between now and the end of 2021, we're still focused on expansion drilling. So we're going to do a lot of drilling. You're going to see in the press release in July, August, September, it's going to say expansion drilling outside the June 2021 resource. So we're continuing the expansion. After the PEA, then we're going to, the recommendation from like every other PEA is going to be doing infill drilling to proceed to feasibility study. So we're going to do that in 2022.
Okay, fantastic. So between now and the PEA, expansion drilling, after PEA, you'll do some infill, and for the PFS, get that resource number up, or certainly the measured and indicated component as best you can.
We may go directly to feasibility.
Okay.
Because of the permitting process that we did for the mill and the tailings, we had to provide to the ministry a lot of detail on the design. So we're pretty well at the feasibility level on the tailings facility. The mill, there will be some work done, but there's no point to do it pre-feas. Might as well go directly to feasibility.
So just back on the mill and obviously the tailings, is that there's a lot of tailings there. Is there any temptation from you guys just to get the ball rolling, get some revenue going, and if the market's positive, and it seems to be, just get the mill operating and just feed it from the tailings alone, and then play catch up later? I mean, again, how do you approach that?
You're reading my mind.
Am I? Oh, good.
Yeah, that's because underground mining, narrow vein, you don't start on day one at 2,400 tons a day. It takes times. It takes 18 months sometime for some certain underground mine to ramp up the production. So why not process the material in the existing mill, and then you go 0 to 800 tons a day. It will take you anyway close to a year to ramp up. And in the meantime, you prepare your tailings because you're going to keep putting the pulp in the facility. But the mill itself can run at 800 tons a day for many months before you need to inject capitals on the upgrade of the mill. So
sounds smart to me.
So it's in the cards, and that's what there is a high chance the investors will see that in the PEA. You're not going to see the mill startup construction on day 0. It might be on month 6, month 10.
That would be interesting. So you're saying that the PEA could include a provision for funding for the mill just to start processing the tailings sooner rather than later, get cash flowing, prove the mill's operating, there's a route to market, all of that good stuff, and then you can upsize at a later date once the underground is able to kind of come in and contribute.
Exactly, and we're gonna do the trade-off study for sure.
Okay, fantastic.
Between putting all the capex up front and run, but I know it's not going to run at 2,400 tons a day on day one. Unless the mining engineers tells me, you know what, Pascal, these little open pit that we have at Barry, we could process that right away.
Actually, talking of Barry, actually, sorry to interrupt. Is someone's mentioned that there was some bulk sample from Barry. I mean, and it was mentioned in the PowerPoint, but now it's not mentioned in the PowerPoint. What's happened to that?
Well, that's what happened when you got management change.
Right. Okay.
The bulk sample at Barry is, to me, we did a bulk sample of 600,000 tons back in between 2008 and 2010. The underground's still to be confirmed, So we'll do an underground bulk sample at Barry eventually. But right now, the focus is on the resource and on the PEA. And to do the bulk sample, you need to inject cash. Yeah, it's going to generate. The bulk sample at Moroy generated cash. The revenue was higher than the cost of the bulk for Moroy, and it was like 10,000 tons. So I expect the same thing for Barry. Except Barry, to do the bulk sample at Barry, you're going to truck it to the mill, and that road needs some capex as well. So you got to consider that on your cost of the bulk sample. So and it's all cash up front. And when you do a bulk sample, you're never 100% sure of the revenue. That's why you do a bulk sample. You know your costs, but you're not 100% sure of the revenue. So you got to be careful when you allocate funds for exploration, expansion drilling, PEA, and permitting. And then if you take money away from that to put it in a bulk sample, what's going to gain more traction with the investor? Drill results or bulk sample results? So we decided we're going to go expansion drilling and PEA. That's the decision we took.